Funding for Market Journal is provided by the Nebraska Soybean Board.
Animal agriculture is vital to Nebraska. Livestock production not only contributes to our food supply, but also helps our rural communities. Livestock provides revenue for schools, creates jobs, supports Main Street, and enhances the future for farm families. The Nebraska Soybean Board's Animal Agriculture Initiative works to encourage growth of responsible livestock enterprises to benefit agriculture and Nebraska.
Market Journal, television for making agricultural business decisions, is a presentation of the University of Nebraska-Lincoln Extension, where you can know how, know now. Promotional support is provided by the Nebraska Farmer magazine, and major funding for Market Journal is provided by the Nebraska Soybean Board. The Soybean Checkoff, growing opportunity from the ground up.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this episode, Ron Plain analyzes the hog markets. Tina Barrett examines tax changes for 2013. Greg Horstmeier from DTN discusses the DTN Farmer Confidence Index. And Bruce Anderson outlines pasture options based on precipitation going into spring. Despite mounting concerns regarding low water levels in the Mississippi River, 2 U.S. lawmakers believe transporting commodities on the major waterway can continue. Senator Dick Durbin and Congressman Bill Enyart, both Illinois Democrats, visited a stretch of the river this week to see how a continuing drought could affect shipping. AccuWeather forecasts the Mississippi River at St. Louis to be at its 4th lowest level on record in early February. In an interview with Reuters, Senator Durbin said the water was sufficient to meet barge traffic, but the White House is open to any option if river levels continue to drop. The American Waterways Operators, which represents shipping owners and operators, says a January disruption could affect more than 8,000 jobs and $2.8 billion worth of commodities. The USDA released reports Friday updating the 2012 harvest and quarterly stocks numbers. Since the numbers weren't out by the time of this taping, we were unable to cover them for this show. However, we did talk with Elaine Cubb Friday afternoon in a video you can see on the Market Journal website and on our YouTube page. Ron Plain is our marketing analyst this week. Ron told us in December that 2012 would be a record for cost of production in the hog industry. While costs are still high, the prospect of large corn and soybean acres planted this spring could brighten the outlook. The USDA released its quarterly hogs and pigs report in December. We asked Ron Thursday how markets reacted as they entered 2013.
Well, actually, they took it fairly well. It was a disappointing pig report. The pre-release trade estimates were for a 1% smaller swine herd. USDA says same size as a year ago. Breeding herd up 0.2%. So it's bearish news. We had about $1.50 drop in the futures market the Monday after the report, but it took it fairly well.
What do you think the state of the industry is right now in terms of what you look for maybe spring and summer farrowings?
Well, USDA predicted that winter farrowings would be even with a year ago. One optimistic number in the report was that spring farrowings would be down 1.9%. I have a little bit tough time being quite that optimistic, but I hope they're right. What it all means is it looks like hog slaughter here in 2013 likely to be very close to last year's levels, and weights have been down for the last number of weeks because of higher feed costs, so total pork production in 2013 also likely to be close to the 2012 level.
You thought maybe the herd had been cut a little more than that?
Yes. Last year was a tough year financially. It looks like the average producer in 2012 lost about $12 per head. I was expecting a little bit more of a cutback in hog numbers in response to all that red ink.
What are you looking at right now for the current break-even?
Well, it looks like for last year, somewhere around 68 cents a pound live for producing bears and gilts. The data late in the year, a little bit over 73 cents a pound. Both of those are records. The last 4 months of data were all record high, but feed's been backing down a bit, so we're probably going to see a little bit of a downward trend in cost of production as we move into 2013.
Yeah, in that regard, Ron, corn and soybean meal prices, are you confident enough now that producers will have the stomach to pay what they need to pay to get through the summer and into, the harvest?
Yeah, good question, Jeff. Well, the answer is once the pigs are born, we will feed them, and so they're going to pay what they have to do that. The real question is when are they going to start anticipating the results of this 2013 corn crop? If the weather looks good, we may start to see some herd expansion as we move into and through 2013 in anticipation of lower prices. On the other hand, if the weather patterns stay dry like this, we're not likely to get much price relief on feed costs.
Are you at all looking at expansion? I mean, is the mindset of the producer confident in that, this thing will turn around and they can maybe increase the size of a herd?
I think that's sort of the natural inclination of most pork producers, is that they're optimistic. And yes, I think if we see signs of lower feed costs, we will see some herd expansion. That's just something that producers do. That, one of the other interesting things, production efficiency keeps going up. The number of pigs per litter in the fall quarter was a new record high. Hog farmers are getting better at what they do, and they like raising pigs.
The export market was strong in 2012. What do you expect to see here for 2013?
Yeah, you're right, Jeff. We set a new record, it looks like, in 2012 in pork exports. And if we produce about as much pork this year as next year as last year, there's a good chance 2013 pork exports could be up again.
All right, give me your outlook here for prices over the next month, 2 months.
Well, we're starting the year with carcass prices in the low 80s. Seasonally, we tend to be kind of flat for the first quarter of the year, and then a very fast run up during the second quarter. We'll probably see hog prices move to the upper 90s on a carcass weight basis by June. A strong summer and then a decline in the fall. How fast of a decline sort of depends on what kind of numbers we see as far as herd expansion.
Next week, we'll talk with Roy Smith for his thoughts on the corn and soybean markets. Again, our web-only interview with Elaine Cubb, taped after the USDA January crop report, can be seen on the Market Journal site and YouTube page. The exhilarating end to 2012 brought a fiscal cliff deal in Washington, which changed tax preparations for filers. As those alterations were too complex and varied to cover in one interview, today we'll bring you part one of a three-part series with Tina Barrett. In the following two shows, we'll discuss estate taxes, capital gains, and the alternative minimum tax. This week, Tina explains changes to depreciation and the payroll tax, and why some uncertainty is based on how soon you can even file.
IRS was sitting and waiting, deciding what Congress was going to do, so they didn't have forms prepared. They are not at all ready for a 2012 filing season. So they're telling us right now that we can file nothing until January 30th. And then most people will be able to file then, but the one main form that we're going to be missing is the depreciation form. So anybody who has depreciation on their tax return, they're telling us right now, late February, more likely mid-March, before that form will be ready, which of course puts us after the March 1st deadline for farmers.
Right, this makes it a very tight window.
It does, and I think from a tax software standpoint, we're going to be able to prepare tax returns and have them ready, but we have no idea when we're actually going to be able to file them, and we've gotten no guidance as to whether IRS will give us a reprieve on a penalty for farmers who are supposed to pay by March 1st, even if we can't file it until after that time. So one option we have is to get an estimate paid by January 15th, which extends our time to pay until April 15th. That's a really short window at this point. But if you're at all concerned and definitely don't want to pay a penalty, that's the only guaranteed way we know at this point to avoid that.
That payroll tax for employers, when do they have to backdate that for or from?
Yeah, so what actually wasn't in the fiscal cliff bill was an extension of the payroll tax holiday. So what took us 2 years to get used to of withholding 5.65% is now gone, and we have to go back to withholding 7.65%. So if you did paychecks between January 1st and now and realize you made a mistake, they're giving us until February to make it right, but we need to get that done. It's not quite as fun as the mistake you made when you over-withheld, because now you have to withhold more from your employees' paychecks.
And tell them about it, most likely.
Exactly. So it's not going to be quite as much fun, but we want to get that fixed.
The depreciation from 2012, the last time you were on, we had joked about, what they were going to be able to write off and what they weren't going to be able to write off. The tax-free, let's just talk about depreciation for itself. How does that change for 2012?
So what they did was gave us retroactive to the beginning of 2012 $500,000 of $179. So what we didn't think we were going to have, they gave us, and then they also did that for 2013. So you got all of this year to spend money too. But it does change things from how we planned tax planning. We can certainly, if we were just up on high income. We can certainly lower income now with those extra purchases, or we could consider a contract election, which is a little bit complicated, so you want to make sure you talk to a tax advisor on that. But if you have a grain that you delivered in 2012 and deferred the money, we could potentially pull that in, offset it against depreciation, and reduce our inventories a little bit.
For 2013, depreciation at 50%, is that correct, of new purchases?
Right. So they also extended the 50% bonus depreciation, which is a good news for all the building companies out there, because that gives us one more year that we can put up a machine shed and write half of it off in the first year of purchase. And so that's a calendar year thing. So the bonus goes through December 31st, 2012. And for any fiscal filers, the Section 179 follows their tax return year. So their 2012 and 2013 tax returns are both going to get a $500,179.
As far as tax-free distributions, what are the changes there?
Okay, so one of the other things that they
It
did...
seems like you're gearing up for something big. All right.
Yeah, well, one of the things that they changed for 2012 is, and they've given this to us a little bit in the past, but what you can do is take money out of your IRA and give it directly to a charity, and it lets you avoid having to itemize to get that deduction. So if you took a distribution from your IRA in December of 2012, you can turn around now and give that cash to a charity and make it work, as long as you do that in the month of January. Or you can take money out of your account, your IRA, have it sent directly to a charity in January and deem it a 2012 withdrawal. Or you can do that the entire year of January of 2013. It's a really nice thing if you're over the age of 70 that you can do, lower your taxable income and get that money into charity without having to itemize.
Next week, in the second interview of our three-part series on tax changes, Tina will explain the modifications to capital gains and the alternative minimum tax. For a more detailed breakdown of tax changes brought on with the fiscal cliff deal, you can visit the Nebraska Farm Business website at nfbi.net and read the January 2013 newsletter. Until April 8th, Nebraskans have an opportunity to win free groceries for a year. The giveaway from Farmers Feed Us started this week and runs for the next 3 months with the hope of educating consumers about where their food comes from. You can register and watch videos from Nebraska farmers, a veterinarian, and a grocer on farmersfeedus.org. Maybe it shouldn't have, but the confidence farmers and ranchers showed in DTN's latest survey surprised us. They felt better about the 2012 season after harvest than they did before planting. As Greg Horstmeier explained when we talked Tuesday, it probably had something to do with the high levels of income growers would record. The DTN survey of 500 producers across the country showed crop growers were more positive than livestock producers, yet those in the livestock industry still felt better in November than they did before harvest. They are, however, understandably pessimistic about next year's outlook. We started by asking Greg if he was surprised about how positive producers were overall.
In a basic sense, yeah, positive if you think about the drought that we had in 2012. Though when you really think a second about it, not so surprised in that while we did have a horrible drought, record drought in 2012, because of the crop prices, because of the prices that farmers got for the crops that they did raise, and because in the case of crop farmers, crop insurance, which most of them had this year, we really saw record farm incomes for this last year. So these numbers were gathered in late November, early December of 2012, a lot of uncertainty going on at that time, but farmers by then knew what their crop was, they knew what their income was, and they were saying, this really isn't too bad.
Let's talk about some of the logistics of the survey. What type of questions, how many producers did you sample, those kinds of things?
Right. Well, there are two sets of surveys. One go out to farmers. We survey 500 farmers, and we make sure that we have 500. That's a constant through all of the years of the survey. And then there's a separate similar question set that are asked of agribusinesses, and that's asked of at least 100 agribusinesses 3 times a year. We're reporting both those numbers now. The questions we ask basically are fairly simple in terms of, are things better, the same, or worse than what you expected them to be? And so we ask them about their present situation. Do you feel good, bad, or indifferent about
Just for the time being.
Right, for the time being, right. So in this case, in late November, early December, how do you feel about your situation? And then we ask them about the future. Do you expect that to be better, worse, or the same? as what you are right now. In the case of agribusinesses, we ask similar questions. How is your business? What's your income now? What do you expect it to be in the future? And do you expect it to be better, worse, or the same, as it is in the future? There's many questions, but they basically boil down to those three answers: better, worse, or indifferent, or the same. And then the indexes are based on the calculation of those answers.
As they look forward, livestock producers, crop producers, what are their concerns and what do they feel good about?
Well, I think in their future expectation numbers for this time are more pessimistic than their present situation. That's something we've found that it's a bit of a common occurrence in these surveys, that frankly, the last 3 years that we've been doing this have been good years for agriculture. And what we see as farmers look down the road is what we sort of take it to mean is that they're constantly waiting for the other shoe to drop. Will the good days end? Even in the case of drought, will it be worse than what we had last year? So as we talk to the farmers that we surveyed and to other farmers, the things that we see common denominators are the continued drought in the case of both crop and livestock producers. Our DTN meteorologists are saying that for the time being, we're still not getting the moisture that we would need to replenish ground moisture supplies going into 2013, and we think farmers reflect that. I don't know what things are going to be like at planting. If I'm a livestock producer and I'm already behind in soil moisture, I know what my forages and my grazing areas were like last year. I'm worried about what those things are going to be like coming up.
I'm curious as to what the perception is as to how this relates to the overall economy, or if it does at all. And I'll mention again, this was in November, December. The fiscal cliff was in play. The Farm Bill was in play. Exactly. But does that at all play into how you think people are responding, or agribusinesses are responding?
Well, I think in both cases, I think there was some. If you look at the fact that the future expectation numbers are lower than my current situation numbers, I think we'd have to say that the economy plays some part of that. But to be honest, the economy in agriculture, the Farm Bill debate notwithstanding, but the general economy in agriculture has been fairly good the last couple of years. It's been better than the average economy. Farmers know the incomes that they have for this past crop year, so they were feeling good about that. I think there's some concern there, but I would sense that the greater concern in agriculture, both farmers and in agribusinesses, basically come down to what it always comes down to, which is weather. What's next year's crop going to be like?
When do you take the survey again, and how important do you expect that'll be?
That one will be an interesting one. We do these 3 times a year right before planting, so in March-ish time frame. We do them in August, right ahead of harvest, and then we do the year-end one that we're talking about here today. The next one will be in March, right ahead of planting. Quite frankly, that's one that I'm really interested in seeing how that turns out, because we will know a little bit more about where we're at in terms of moisture. The livestock sector will be responding to where they think things are going to shape up in terms of forage production and some of those kind of things. So yeah, there's a lot weighing on that one.
DTN survey is based on 500 respondents, and that number stays the same with each survey. The survey caps once the first 500 responses are in. Brandon Christensen of Plainview has adopted much of the latest precision technology to the 4,000 acres he and his father Rick farm near Plainview. As you'll read in the January Nebraska Farmer, it isn't haphazard adoption, rather it's part of a systematic approach to technology that works. This spring, Brandon plans to expand remote access capabilities beyond John Deere's Apex system and the new mobile farm manager software by adding a Trimble Yuma tablet with integrated FarmWorks mobile software. You can read more about his goal of efficiency and perfect seed placement in the January Nebraska Farmer. As you heard earlier, the major concern for farmers and ranchers over the next year is weather. For livestock producers who have seen their costs skyrocket, some form of moisture on pastures and ranges is a necessity. We talked with Bruce Anderson Tuesday about 2 different scenarios for those areas, if the drought were to continue and if the drought were to end.
Well, I think one of the things we've got to recognize as producers start looking towards their spring grazing is that we're going to be moisture deficient in the soil. There's just no question about that. We go into the winter with low amounts of moisture in the soil. We can't build it up during the winter because of frozen soils and rather limited moisture that comes from snow. So our first hope for any kind of moisture will come with the spring rains. Even if we do get some spring rains, chances of that water soaking down all the way into the profile is pretty low, except maybe on some of our sandy sites. So we're going to start out the spring in deficit conditions. Also, we're going to start out the spring with plants that were heavily stressed by last year's drought, and so our expectations on how well they're going to be able to grow, even if we do get that moisture, is that we won't be able to get as much productivity as we might normally expect.
UNL is offering a series of short courses that are available on the beef website about two conditions: if the drought continues, if it doesn't continue. If it does continue, are there any options at all other than to try and get what you can out of it?
Well, certainly that's the first thing we have to be looking at there. I think especially if the drought does continue, one of the things we need to be thinking about is really long term, because as we put more stress onto our pastures, onto our hay grounds as a result of the drought, we're going to weaken and injure those plants. And we want to be looking at those plants still being alive so that once the drought does break, hopefully by next year, but maybe the year after that, they'll still survive and be able to provide feed to our livestock. So do no harm is kind of one of the things that we want to have as one of our focuses if the drought does continue.
Already injured from last year?
That's right, already injured from last year, and that could multiply on them if the drought does continue in a real severe manner.
What does that mean for stocking rates for this year's pastures?
Well, if we have that drought continuing, our stocking rates are really going to have to be reduced down, and in most cases we're going to have to be looking for feed to give to the animals in more of a dry lot type of situation, or actually culling more of the herd so that we don't have the pressure of the cost and care that we would have on those animals.
How do you look at the turnout when you're turning the cows out into the pasture, the range, both if the drought were to end and if it weren't to end?
Well, I think one of the things we do feel confident of is that there's enough moisture, at least in the surface, that things are going to green up. And one of our temptations is going to be to go out there onto those pastures as soon as it greens up, because we're going to be darn tired of feeding this expensive hay all winter long. But that's going to be one of the worst things we could do. So no matter what the situation is, I think delaying when we turn out 10 days, 2 weeks, so that we can build up a little bit more growth off of those pastures and let those plants kind of recover from the stress of last year plus the stress of the wintertime is going to be one of the actionable things we have that we can do that will help out our grazing lands.
The high price feeds, like you mentioned, anything that producers could plant back into the ground to try and help out here?
Well, we need to try and be optimists and,
and
opportunists. It probably will rain sometime next growing season, and we need to be ready when that rain comes, if we do have land available, that we might be able to plant like an annual forage there when moisture is available. Certainly looking at things like oats, or possibly looking at things like the summer annuals as feeds that we might plant when there's moisture there available in the soil, are things that we got to be looking for ahead of time, so that when the opportunity presents itself, we've already secured the seed, we've already made our plans on what kind of tillage and planting we're going to do, so we can get those done on a timely basis rather than scrambling at the last minute to try and accomplish those objectives.
Do those take little enough moisture that if it weren't to rain very much, you'd still be okay?
In most cases, we can get something even with just a little bit of moisture.
Forage specialists from UNL will discuss this topic in depth during 2 beef short courses later this month on NET2. Thursday, January 17th and Thursday, January 24th at 7 o'clock p.m. Central Time. They'll also be available for viewing on the web at beef.unl.edu. Now to forecast this week's chances of precipitation, here's UNL Extension State Climatologist Al Dutcher.
Well, folks, here we are again for the weekly forecast. Before we take a look at the main forecast, let's take a retrospective look at what's happened over the last 7 days. Last week we talked about a storm system that would be coming out of the western United States, and depending on how that system evolved, we could see some significant weather somewhere in the central or southern plains. Well, the storm system did come out about a day later than normal, and actually we've seen the southern portion of that energy come out before the northern part. That is why we've seen some widespread rainfall across eastern Nebraska, with some isolated pockets of moderate rainfall, but most locations were generally under 1/10 of an inch, with a few up to 1/4 of an inch. And now we're paying attention to the cold front that has moved through the state and has given us much cooler conditions, also resulted in some significant snow across portions of the Dakotas and Montana that basically put snow back on to a snowpack that had disappeared. So we reestablished a firm snowpack in that region, and some of that actually made it up into the northwestern corner of the Panhandle and portions of north central Nebraska. Now, as we go forward in time, it doesn't appear that there's much in the way of significant weather. We definitely will see some cold weather for the next couple days, and then we are going to see moderating conditions before we start to pay attention to another piece of energy moving down the pipe from Canada sometime late next week. So let's take a look at the upper air models and see what we have in store. And the first thing I'll draw your attention to is, even though the first piece of energy that came out earlier in the week is now already exit out of the northeast, we kind of getting a re-merging of these two systems. But you're seeing most of the energy up in the Dakotas. So most of this energy down to the south of us is not going to result in any significant moisture. It's pushing that moisture well up to our north and to our east. And behind this, we're seeing so much colder weather, and that's going to intensify as we go into tomorrow, as you start to really see the system wind up, and it's going to start to draw down some very frigid air into our region. We should see basically fairly calm conditions. The winds will start to lighten up. Nothing in the way of significant moisture, unfortunately. And as we go into Monday, we'll see another piece of energy to our south and this main core up to the north. And we're kind of caught between both of them. So we're going to be in the cooler conditions with nothing in the way of any moisture around our region, unfortunately. Now, as we go into the day on Tuesday, you'll see that that system tries to make its way toward the Great Lakes. So the energy is going to be from basically southwestern Texas all the way up into the eastern Corn Belt. We're left high and dry, but we have this very cold weather that's going to move into our region. The good news is, by the time we get to Wednesday, we're going to see this trough shift to our east, and warming conditions will start to take place. And that will continue as we get into Thursday, as we see some moderation. But there are signs as we get into Friday that another piece of energy is going to try to start slipping its way down into our region and bring much cooler conditions. So as we go to the temperature forecast, we're looking at some very cold conditions early in this week, and you'll start to see this general modifying trend in the east as we make it up into the upper 30s. Out west, easily into the upper 40s before we start to cool down on Friday. 8 to 14-day forecast indicates the cold weather will continue. In terms of precipitation, most of the significant moisture will remain to our west, with dry conditions Nebraska westward.
Thanks, Al. Our interviews with Ron Plain, Tina Barrett, Greg Horstmeier, Bruce Anderson, and Elaine Cubb are archived on the Market Journal website. Next week, Roy Smith will be our marketing analyst. We'll look at changes to capital gains with Tina Barrett, and we'll talk with animal welfare expert Temple Grandin, who will be speaking at UNL as part of the Huerman Lecture Series. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Facebook and Twitter. Promotional support is provided by the Nebraska Farmer Magazine. Funding for Market Journal is provided by the Nebraska Soybean Board. The Soybean Checkoff, growing opportunity from the ground up. Market Journal is produced by the University of Nebraska Lincoln Extension, where you can know how, know now. Funding for Market Journal is provided by the Nebraska Soybean Board.
Whether it's spring planting, fall harvesting, or just a drive across the state, soy biodiesel helps a diesel-powered engine operate in a demanding job. Soybean oil from Nebraska soybeans makes biodiesel a renewable fuel that's also environmentally responsible. The Soybean Checkoff plays a major role in supporting the use and availability of biodiesel. The Nebraska Soybean Board, growing opportunity from the ground up.